Hello everybody, Jackson here with the Wells Squad. Today we'll be talking about the stock market, more specifically the interest rate hike from the Fed earlier this afternoon. As you can see, the stock market responded positively. We can see a jump here from around the bottom up. We see around a 3% gain in only an hour and 20 minutes. So definitely a solid gain from the stock market. And what does this mean? So let's look at a visual here. We're seeing uh, federal funds rates, obviously 62-year historical chart. So we're looking 62 years in the past. Um, at the last couple years, we've been very generous. At least they've been generous to us, more like with a low rate, right? We're seeing 2010 to 2015, we got under a 0.2, and that helped spark most of the bull market. Um, and then we started get more hikes in there, and then we dropped off during COVID, which was uh, obviously the right decision because COVID money was tight. We didn't have enough more to spend, but now we have more to spend. Inflation's getting out of control, according to the Fed. Looking 10 years in the past, we just started this hike. That was last quarter. So this is a 0.25% hike, and now we're going to go up to 0.75, which will be right around here, right around in the middle of these two. So it'll jump up this line. Um, so what does this mean? Well, it means that we see right here is the interest rate at which depository institutions lend reserve balances to other depository institutions overnight. Um, so basically, the rate determines a lot of the stock market actions, and the cheaper, then we see the cheaper it is to lend and borrow. The more expensive, then we're getting pricier. Since there's a lot of money in the system, we are using this hike to combat that. So that's what we're seeing over the past 20 years. You see before the 2008 crash, it was at 5%. And a long time during this bull market was, are you going to keep seeing a hike, keep seeing a hike? Are you going to see a cut? And that's what we saw during COVID. And we just started seeing a new hike within the last month and a half or so. So what does this mean for the stock market? First things first, it was a very positive action here today. You can see mostly everything in the green, and you can see exactly when this news was announced and when it kept climbing. And this is across crypto as well. We can check out Bitcoin. The same jump here, not to mention Bitcoin in that buy zone, but the same jump here of it's a positive action, right? We're cutting down on inflation. So just keeping you in the loop here, the Fed hiked rates by 0.5%, now around 0.75%, and they're going to continue to increase rates. So we're going to keep seeing these interesting actions at 2 o'clock on every couple weeks. So be on the lookout for that. Not to mention, on the 15th, we have the new interest rates coming out for the last year. So go back to May of last year to May of this year and consider and basically count the inflation year over year. It's also called the CPI report. So be on the lookout for that on the 15th. But this is some pretty big news. You should look more into it if you are interested, not something to glance over and forget about. All right, that's the video. Thank you for watching, and until next time.